Alright, if we break down here, guys, I'm short for the same cash flow targets. I appreciate you for being here.
I'm sure right now target hit. This is what we call a magic hour.
Alright, I'm taking this.
The upside ahead, the momentum to the upside ahead, everything aligning, live pricing, historical data, right?
Right there.
Welcome, this is Pack TV. Sit back, relax, and watch how we day trade with statistics.
Pack TV, God given, so I gotta make it happen. I'm on mission, not like them, I'm different. That bag come with a pension, talk about that business. Like I'm hard all in the pain, shining hard, don't need no chain. All this drip, it feel like rain. Everything on me, got it on my name. They don't got it like this, they don't talk it like this. I was built for this. That TV not like guns, take it away.
Stop me, it's me. If you're doing this for the women, you're losing. Do this shit for yourself. I do this shit for myself. They rigged the race long before your first breath. Signed your name in the ledger, made a bet on your death. Puppet masters and neckties, count your hours like cash. Presidents pushing their pieces while you fade in the ash. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain. Burn it down, burn it down. Burn it down, burn it down. Lead over production, too many mouths have been thrown. China rise in the rear view, old empires turn to bone. Same damn cycle, same sharp teeth in a grin. They sell you fate on a pay-per-view, call it virtue, call it sin. Game theory kings in a smoke-filled room, writing out the rules to your ruin. The world ain't chaos, it's their game. Their game. You never learn a script they spin, cause they don't want you to ever win. Flip the fucking board, let it rain, let it rain.
Austin, are you there? Hell yeah,
There we
TP.
go.
Trade I just took our famous midnight retracement, right? We got the intrade. We got the intrade right when we went live right here, went long, right? Over the queen right here, right? And then ran it to P12 mid. And if you look at the data today, like midnight had a higher probability of getting hit between the 8 o'clock hours. So that wolf trade is why I took it. Fucking let's go. Risk was 225.
You talk about a instant TP right there. Jeez.
Dude, how many times have we just managed our risk and traded the midnight during CPI or NFT Friday? It's not new information. CPI is not new.
I feel like if anything, these days are just like midnight open target, like magnets. I don't know.
Yeah, it's either stop loss instantly or TP. Like I'll get some slippage, but I'm risking 225 period, right? 5 micros, right? And so it's like it doesn't even matter. Like I'll get slippage to the downside. What max with 5 micros, maybe $100, $300 max, right? Don't care. It's accounted for.
Hey, Dojo said he did it on the same thing on paper trade. There you go. Good way to start the stream. Let's go. Good morning, everybody. Let us know in the chat if you're watching from. If you are watching from London, if you're watching from Australia, Europe, America, Canada, Mexico, Brazil, Netherlands. I don't know. We got people from Antarctica.
Ooh, Antarctica. Sorry. Actually, I bet people like living in the cold. There's some psychopaths out there that like the cold.
See, I like a good solid 50. Anything below 50, then that's not fun.
Yeah, I like a good solid fall. I can wear hoodies and beanies, while being able to wear shorts.
Yeah,
right. That's the perfect outfit right there. Beanie, hoodies, and shorts. Winter in the front, summer in the back.
Oh, we got a couple German. Dude, we got so many people. Is Germany just like... Are you guys just... Do you love math or something? We just have so many statistical-based traders from Germany. What's going on in Germany? They have a really good math program in school or something? So many people from Germany interested in what we do, or already doing what we do. All right, so let's get into what we see a little bit today, guys. I was sitting here strategically waiting for CPI to chill out and do its thing, and I'm actually really glad on a news day we're not false instantly, so that makes this a little bit better. Am I crazy, Mick? How do I make this chart just a tad bit smaller? I know I'm crazy.
Oh, okay. What chart? Oh, yeah. You just scroll down just a little bit. Slowly.
Am I missing?
Keep going. Right there. You see model table?
Dude, I was like...
In a tiny or small.
TradingView did something. I don't know what I did yesterday or 2 days ago, and it just deleted my entire format. So now everything's all, as in the wise words of Bubbles from Trailer Park Boys, my stuff got jinkety janked.
Oh, I like that. I've never seen that show, but I definitely am going to use that from now on.
Dude, you got to watch that. You would love that show.
Dude, the last show I watched was a show about these rednecks in Canada. I can't remember what it's called.
Oh
my gosh, it was epic.
Boy.
It's not. No, it's Letterkenny. Letterkenny was the last one I watched. That's the last real TV show I've ever watched. And I was like, there's no show that can beat this, so there's no need to watch TV anymore.
Well, if you like rednecks in Canada, that's exactly... You got to watch Trailer Park. Dude, it's a bunch of dudes in a trailer park in Canada smoking weed and drinking all the time. It's hilarious.
Oh, wow. That sounds like white trash in Canada, not rednecks in Canada.
It is very,
There is a
Maybe that's
distinct
all right.
difference.
James, I love Trailer Park Boys. There you go. All right. So, ladies and gentlemen, today is Friday. So the one thing that I love to do, the later we get into the week, is I like to see where this weekly candle is creating the high and the low, just like how when I'm looking at the daily candle, where's the high and low of the daily candle? Okay, first I look up the symbol period. No, I'm joking. And I just want to see, okay, where are we at within the weekly open? So we have, let me delete these images here. So currently in the week, we have a high on a Wednesday. We sold off yesterday through the weekly open, and now we have a low on a Friday. So statistically, we usually form the high or the low in the first portion of the week. You know, if you just were to look at this like an hourly candle, if you just project it from Sunday to Sunday, you can see Q1 is in that first portion, Sunday, Monday, Tuesday. So statistically, we're going to lock in this high or low in the first chunk of the week. Now, we just barely wicked above it here on Wednesday when we made this little huge spike up on the weirdest NFP day ever, which was an NFP day on a Wednesday. Very strange. But nonetheless, we did have a good high of week on a Tuesday, and then this just NFP candle kind of slightly wicked. And then now we have a low on a Wednesday, or I mean, I'm on a Friday. So statistically, just a very subtle wick here. Statistically, even though this looks very ugly, we've kind of done what a bearish candle typically does, making the wick in the first portion, making the other wick on the lower portion. So given the fact that there isn't really a good high or low that I'm targeting going into the session for the weekly candle, I'm now flipping to the other side of the coin. Well, think about how a candle gets built, no matter what time frame you're looking at. Once the wick is created, usually what happens? If we have a wick being made, let's say we're, like in this case here, we're making a bearish candle. Here's the open. Okay, this white line represents the open, so I'm going to demonstrate it with this candle here. This is the open. This is the highest point we've made this week, which is what? The wick. This current little move that we're doing right here, here's the bid and the ask. Here is the current wick of the weekly candle. Okay, so if we've now made a wick and we've made the high, and we've now just watched and seen live the lower portion of this wick potentially being created, now what we get to do as statistical based day traders is we get to say, okay, if this weekly candle is potentially setting the wick of the lower portion of the candle today, or are we in the body of a bearish weekly candle and we're maybe continuing to go lower? That is where now our statistics get to come in for the intraday. So going into the day, if we do show signs, and if my analysis shows signs of any sort of bullish movement, I'm going to anticipate from a weekly candle perspective, we're seeing that pullback establishing that wick. If I have any signs of a bearish analysis, if what I'm going into the day is showing signs of bearish continuation, what does that do for me? That tells me I'm in the body of this weekly candle, and then I lean on the highs and lows of the daily candle to see where the final portion of this wick is going to be made on the weekly candle. All right. So if that just went so crazy over your head, just go back and listen to it a couple times, because I'm going to show you like what this would look like. So if we're in the wick and the daily candle is going to now start to become bullish, or try to become bullish, then what are we doing on the weekly? We're doing this. We're setting the wick. We are in the wick of the week. If we start to show signs of continuation to the downside, we are watching this weekly candle keep on printing to the downside, which then from a low standpoint, the low of day, we get to lean on the daily profiler to say, where is the highest probable lows of days from a time perspective? And then that also bleeds into, okay, I'm most likely in the wick of a weekly and a daily candle going into today. So now let's go into where are the highs and lows potentially for the day. So now I'm going down to the 5-minute time frame, and I just want to project where we at currently. Currently, we have a high of day that's out of statistic. We do not typically make generic highs and lows of days at 1905. So this is an out of stat high of day. Then we have a low of day at 8:15. This is, all right, for those of you that's been following along with us for a while, this is a decent low of day for a day with news. I'm going to repeat that again. This is a decent low of day. It's not 8:30. 8:30 is like the perfect, but this is a decent low of day if it's a news day, because news days do contribute, and there's a little uptick in the statistics that you'll see that does provide a decent clarity for this being maybe a low of day. So I'm going to put in stat low, but I just want to clarify that this can easily be taken by us going long false, which I'll explain here in a little bit. So because we have this rough in stat low, but it wouldn't shock me if we do take it today. I'm going to be looking at, okay, well, which side of this daily candle could we be setting market open? When could market open, the RTH open, actually come and take one of these highs and one of these lows? This is where I lean on my P12 analysis. P12 analysis, for those of you that are in the boot camp, is one of my favorite courses that you guys go through because it gives me context of how the first half of this daily candle is being built. And just like that little example I showed you all with the weekly candle, this also gives me the same context with the daily candle. If we are right now, you see this P12 mid, we are, when we break above this P12 mid, we are accepting prices above the first half of the daily candle. So if we are getting above the P12 mid, then my target is P12 high. If we're breaking below and accepting prices below P12 mid, my target is P12 low. And so I'm just thinking if then. If we're breaking above P12 mid with a good low of day for a news day, then is this high of day a valid high to get taken? Absolutely, because it's an out of statistic high of day. So now let's go to the daily profiler and see if the daily profiler gives us a little bit more edge. Now, this is where I said this to the bootcamp people like 2 different days this week, because 2 different days this week, the daily profiler actually freaking nailed what just the generic times wouldn't show you. And that's nuanced highs and lows of days based on specifically what we did overnight. So if we base what we specifically did overnight, we get to build what's called these high a day, low a day projections. And so I'm just going to go in here. And this is, I always love to wait to do my analysis first thing when we're on these Friday streams, because you guys get to see my first, like this. I didn't do this beforehand and now I'm going back and doing it. No, this is what I do every single day. So high of day, we're going to put 0.4 to 0.8 with a high of day time at 10:45 to 11, with a low of day of minus 0.5, 0.6, and a low of day at 6:15 to 8 o'clock. We have a long false high of day at 0.3 to 0.4, and the time is 10 to 10:30. My bad. And the low of day is -9 to -1 with a low of day time at 10 to 11. And that's all we got to do because we're long. We don't even have to do the shorts. I wish my genetics said that. All right. So now.
Wow.
So now we're going to, oh, baby. I don't even want to. I know there's like an awkward 7-second lag on YouTube. For those of you that are either in the pack or the boot camp, somebody tell me what you see on my screen right now from the Daily Profiler. I swear if I have to say it and you guys don't see this, I'm closing down the entire Discord. No, I'm joking. But come on. What do we see? Right? Somebody answer in the chat. I want to see as many answers in the chat from the current boot camp, because you guys have already went through the Daily Profiler or the pack side. What is on my screen right now, combined with what I just went over with today, because it's a news day. Probably already gave it away saying that. What is so unique about today? And why in the world is rain just... What is happening? Dude, it is chaos today.
Are you doing your war game in a rainforest?
Is Pocket over here trying to troll us right now? Putting rain
He definitely is trolling you. He definitely is trolling you.
This is the only thing I
dare. It's
to.
probably restream because I wouldn't dare on the
Dude,
live.
AI said, screw it, we're just gonna brain. All right, I don't see any comments in the chat, but there is like an awkward 7-second delay, and for time purposes, I'm not gonna wait. But we have a long true low of day. We've met the time and the distribution, and it's in a news day, CPI news day. All right. Again, I'm not marrying it. We never marry the trues. Never marry the trues because it's the lower probability. But if we give signs of any sort of low of day, if we give any signs of a potential low of day that's already been established in a directional day off 930, and we haven't came back to take a new low of day yet, I'm putting this in the back of my mind for if 930 shows directionality to the upside, it does make sense to accept that this can be the low of day in both the time and the distribution for what we did here for a long true. Now, for the easier scenario, the higher probability, it's always going to be the false. So what gives us an obvious false today? So if we get back below P12 mid, and take that's the first step of anything, right? I want to see a 5-minute candle close below P12 mid. If we do that, then the target is P12 low, or in this case, also this out of stat low, because we have the P12 low here, and then the out of stat low is just a few, it's like what, 5 basis points, 10 basis points to the low. So this is the higher scenario. And so if this is the higher probability scenario, then the long false low of day is due from the generic time of 930 all the way to 11. And then if we respect this P12 mid, if we cannot get below this P12 mid, then we have a potential 930 high of day coming in at 930 to 1030 right here, long false high of day. And we got to, and yes, please guys, ask questions when we do this, because this is why we do this. Wingo is asking, what was the question? Well, I already answered it. Alpha Prophet says long true has me curious too because of variance. Yep. And we've had this will make a 6-day streak. I believe that we've went false 1, 2, 3, 4, 5, and 6. So we are in a 6-day false streak. Okay. So it would not shock me. It would not be the craziest thing in the world if we did a true day today, but I really hope it doesn't, because Mondays are amazing. And then we just get a nice true day on a Monday, but I don't know. We'll see. Nevin says, why do you not use cluster times for long true from 10:15 to 11? Why do I not use cluster time for long true 10:15 to 11? I'm not sure I get the question. Why do I not use the cluster time? Mickey, do you know what he's trying to ask? The cluster time.
So he's looking, so he's talking about, so for the high of the day, I assume, yes, you can use 945. You're aware based off the range in the distro, which I'll cover in my side of the war game. But you can either use the 945 to the 11 for the high of the day, or you can use the end of day, or you can just assume that the high of the day is coming after RTH.
Yeah,
so I'll cover that in my war game.
Yeah, that's a good question. Like one thing you'll notice that I kind of do is, this is just a little unique thing I do. It's not like good or bad. It's just, this is something I do. Is remember, we know that the high a day, low a day times are in those 4 major times, right? We know that 1800, 3 a.m., 9:30, and 8 in power hour. Those are the distinctive times that generically, no matter what we do, they just lock in good highs and lows of days. So this is where I always say the daily profiler, to me, my edge that the daily profiler gives me is the nuanced, the unique highs and lows that are very specific and unique to today. So I know, because I'm looking at the daily profiler right now, and Nevin, I see like if you look at the chart, it goes all the way back to 8:30 for a potential high of day for a long true. But I take just the high of day mode to median, and then that mode to median, I just take the lowest and the highest number, because I already know that, and we all know this, right? Long true or a long false generically 9:30 to 10:30, this is just a good high of day or low of day time, just generically. So I want to pinpoint of these generic times, what is that like meat and potatoes of this specific configuration? So then what that does for me is going into 9:30, let's say we open up in the high of day. And let's say we get above 9:30 and break above it. Well, now I know from a time perspective, if we are meeting every other requirement for a long true, we still have 10:45 to 11 for this specific configuration. But then we also have some decent distribution. So that's why I'll also do the mode to median for distribution, because of variance, sometimes we can over distribute, sometimes we can under distribute. But if I take this mode to median, this gives me that nice in the middle area. And then from a time perspective, we have variance too. So if I know the pinpointed location of where the data is mostly concentrated, I know that if we have a high of day a little bit to the left, and then if we have a high of day a little bit to the right, that's perfectly fine because we have variance. So yeah, really good question. That's why I do it. That's why I just pinpoint the very specific mode to median times. So my trade ideas for the day, and then I'll hand it off to Mickey here. I went a little bit too long. Is I wanted to see going into the day, if we open up at or near P12 mid. So this box represents the high and the low of 9:31 or 9:30 to 9:31. So there's 3 different scenarios here. In the scenario number 1, if you guys follow me on Twitter, I always give my analysis and my scenarios. I just gave you guys my live analysis. This is my trade scenarios based on that analysis. If we open 9:30 at or near this P12 mid, if we break to the downside, I will be looking for extended cash flow shorts where I'm cash flowing heavy the initial of my position and then letting a couple runners run for the false. If we break above, I will only be looking for cash flow. I will be heavy on the cash flow to the upside. P12 mid at 9:30 is a very big signal for me to be very, very cautious of my risk and be careful. When we open up at the extremes of the day, those become a little bit easier trades. So then that is the more difficult one. Then if we go into the long scenario and we start to come up here and break this high because we're still accepting above P12 mid. So right now, this scenario is what live price is aligning with, is us accepting above P12 mid and attacking a new high of day. And so if 9:30 opens with a new high of day and we break to the downside, I will be looking for heavy cash flow shorts to the downside. That's the only thing I'll be looking for, with just 1 to 2 micros for that potential false if we have it. But that would be just, I mean, look at this. We'd already be at a 1% move from the false. And then if we break to the upside, I would be looking for getting in continuation longs for a long true. If we go in the final scenario, if we open and in the pre-market here, we start coming to the downside and make a new low of day at or at around 9:30, and we break to the upside. I've told you guys this before. This is my favorite trade setup of the entire world. The only thing we did today that I wouldn't like about a new low of day and then a long is we've already hit P12 mid. The trades that I could take in my sleep is when the P12 mid and midnight open are left open in the day and we make a new low of day at 9:30 and then we break above it. This is a trade I will take every single day that it provides, is a break above and an extended cash flow long. So that is my trade ideas. Mickey, there you go.
All right, sounds good. So we have completed phase 1 of the boot camp, right? So our traders got to see how to make decisions with probabilities in the live markets, right? So every live market decision, we showed them the data of why we make those if-then decisions at that area. Then we overlaid it with historical data with the daily profile, right? Then we started talking about some other things like volatility, VVIX, risk regiment behavior, stuff like that. And we tied it all together. So now we all speak the same language of how to understand and align live price with historical data. And so we're going to take a week off, right? And let them catch up on all this and tie up any loose ends and any homework that they have to do. And then we will go into our favorite one, and that is modeling and more quantitative for trade models, right? So we'll be talking about expected value, profit factor, expectancy modeling, how to position size, risk per trade versus fixed position size, MAE, MFE, negative R versus positive R, just how to position size correctly in a reversal style model versus a trend in versus a range in versus a reversal, right? So it's going to be exciting. It's going to be exhausting. And then once we get done with that one, we'll go into phase 3 where me and Austin bitch about different things that we do not like. So yeah, that's where we are within the boot camp, and that's the update for that. Going into my wargaming analysis. Did you read that, Austin? I'll put it back on the screen if you didn't. Phase 3. Just kidding. Phase 3 is where they build their trade plan, and they build all the details of every decision, and they back every decision with data, right? That supports that. So there's no theory games. There's no, I read this one time or I watched a YouTuber tell me I should do this. It's like they're proving it themselves. This is why I'm going to make the decision, where I'm going to make it, and we're going to use actual objective data to make that. And then they come up and they pitch their trade and business plan of how they're going to approach the trade situation. So yeah, that's what phase 3 is about.
I had to run and use the bathroom, so my bad, but this is volume is not. Yeah, I like that. I approve. I'm excited for phase 3.
Yeah, so that's phase 3. All right. So with that being said, going into what we re-engineered last night at 1600, or actually at 1500, we said that this previous day low right here had the higher probability low was to get taken out, and we knew that this was our high probability 30th percentile reversal. This was the 50th percentile reversal, and this was the 70th. We came down to the 50th and we responded off of that, right? We know that we're stuck in between NFP Friday and previous month 50, so the edge of 70% green days versus 30% red days is no longer a thing, right? We have to anticipate 50-50, right? This week we showed data since 1963, I mean, of red days versus green days on the daily candle, and up moves from low to high, high to low on the daily candle. And I started describing how you can define 50-50, since I'm looking at data since 1963 with the SPX, right? How can we break this into if-then statements that push some edge? Because remember, a 50-50 coin flip can have edge in it if you can understand the variance in the streaks of how many times in a row it lands on heads, how many times in a row it lands on tails. And what we did was we saw that the simple if-then condition of if we're above NFP Friday and previous month 50, right, then we get a variance streak of 70% green days versus 30% red days. If we're below those, then we have no variance streak edge, right? And you can see this in any bear market that you go to, right? You can see, right, a lot of 70% green days versus 30% red days, which why that is important, because these statistical lows of days that Austin talks about, 1800 to 19, 03 to 04, 930 to 1030 are going to hold true and end of day closes. Now let's look at areas. Let's go back to 2022, or you can even use a tariff situation. Just looking at this from a glance, you can see this is a bear market with below NFP Fridays and previous month 50%, and you get 50% green days, 50% red days. This is the edge that I think, if you study Jim Simons, right, you'll realize that his fund did the best in bear markets. It still did good in trending markets, but it did the best in bear markets. And I think part of that edge had to do with this phenomenon that has been going on since 1963. Now, I don't work for them. I don't know anybody who does. I don't think I'll ever meet him, but I have studied the man very in detail and his views on statistics. And I think that has a edge that he kind of discovered and, exploited, right? So we know that we're in that realm that we could possibly start getting into a bear market where we're below previous month 50%, we're below NFP Friday, we've taken out quarterly lows. So we're not in a quarterly pullback, but we're in a yearly change of character, right? And we're going to start experiencing that 50-50 split, very defined, right? So right now, right, we know that This high has a 32% probability of getting above under this if-then condition, right? We reversed in the percentile reversal zone, and now we're going to see, is that the good low of the day, and it's just going to suck back into the range, or is it necessary to come even deeper and do that? So we're going to go check this out from a daily profile perspective. Now, what we saw the Tokyo markets and the Frankfurt markets do, or the Asia and the London markets, we saw that Asia sold and London sold, right? So let me get this on the right time frame, and let's start the war game. All right, so now we're going to pull over the daily profile, and we're going to say, so what we were just talking about was putting probabilities on the open, high, low, close. Candle science does that, right? And we've already done that. We've already met the criteria that what daily profile does, it allows you to say, if the Asia session did this and the London session did this, what are the probabilities for these levels in high day, low day for the New York 1 from 7:30 to 11:30? And the New York 2 uses London and New York 1 to find out what the afternoon is going to do, just like Asia uses the previous day, New York 1 and New York 2, to figure out what the probabilities of what Asia is going to do, and so forth with London. All right, so that's what we're going to do here. We saw that it was a short true broken in the Tokyo markets, long false broken in the Frankfurt markets. And so now we knew that we broke out to the long side, meaning the 7:30 to 8:30 range, which we use every day to measure data around, we broke out of that to the long side. So before we broke out of that, there's 4 possible scenarios that we could do between 11:30. Now there's only 2, right? So now we're going to see what those 2, which one's the higher probability. Well, we can see that there's only a 64% probability that we go false and a 35 that we go true, right? So now we have to consider our if-then statements for both. What are we going to do in both situations, right? And where can we define it's going to be false versus true? Because this is fun statistical data, but unless you have areas we can decide as the live market is printing, right, this doesn't make you money at all. So that's what we're going to do. So first and foremost, we're going to come down to the low of the day, high of day, right? And we're going to put in that if it was a false day, meaning that we go up to come down by 11:30, right? What that would look like and what levels to the top can we make that decision around, right? So we are going to war game that first and foremost, right? So we can see that there's a 1800 high a day edge during this scenario. Well, last I checked, we have a 1900 high a day, so that's a good high a day, like it's 18 to 1900, right? Because I do the whole hour, and 1905 is just 5 minutes. So like that could be a high day. We could turn around right here, right now, and just sell off to the face of the earth, right? But we also know that there's still high days. There's a cluster of high day right here that we have to account for, right? So this tells us, right, that this 1800 high day, yeah, it has 9, 7, 16, 16. It has about 20% of the high of the day across what Asia and London did, right? But the majority of the data sits between 9:30 and 10:30, right? All right, so the live price action component that we sync with this is that we know that 9:30 likes to make a new high and then start going lower, right? So we'll be looking for our 4-step reversal. If we start getting the signs of the 4-step reversal, right, then we're going to start seeing, and we're going to start anticipating that we put the major pivot in for the New York 1, right? And so if you don't know what the 4-step reversal is, we teach it in the boot camp, and you can learn it by joining the boot camp, right? So another statistics that I want to pay attention to today to see if we're going to get the false, right? Let's put our high day data in from a percentile standpoint, right? We can see that the high of the day is between 0.3 and 0.4. So for the long false, I'm going to come over here and say high day 0.3 to 0.4 basis points between 9:30 and 1600. So if live price starts showing me reversals in this area right here, 0.3 to 0.4, that's where the mode to median is. And we like to use the mode to median because that's where the bulk of the 68% of the data lies within a bell-shaped curve, right? That's where we're going to, start making decisions around. So the main factor is like do we continue going up, and then do we do a 4-step reversal and start getting below 9 o'clock's 50, 9:30 low? Then we can start taking sells, right? And we can start anticipating a new low day between 9:30 and 10:30, or in the day low day, right? And live price will control that element, right? The one other level that I want to look to confirm is this P12 high, right? So we can see that the P12 high still in a long fall scenario has a high hit rate of 71%, and the major time that it gets hit is between 9:30 to 9:45, right? So if we can't hit it by then I am definitely going to go with the sells, right? And then Globex Open, which what we can see with Globex Open, yes, it has 81% of getting hit between 8 o'clock and 11:30, but the mode is past us. The mode in the median is past us right here, right now. There's a secondary mode, but the skewness and the ketosis is more towards the 8:30 candle hitting that, right? I'll still allow it to hit it, but if we can't hit it by 10:15 and we start selling off between now and then I'll accept the fact that this 81% is not true, and the probability is gone with the ketosis and the skewness of the data. So now we're going to go look at the P12, or at the other scenario, the lower probability scenario, which is 37% true. Wait, let me fix that. Which is 35% true, right? So if we have a true day, we know that that current low of the day is very, 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 very much supported. The current low of the day that we have. The problem that we have to solve with this is, are we going to put a higher day between 11:30 or 9:30 to 11, and then range the rest of the day between high day and low day, or are we going to continue to grind up, right, to end of day, high day, right? And what I'll tell you with this is we have our distros, right? We have our New York, our 10-day median distro is 714. We currently have only put in 244 handles, right? We know volatility is contracting, right? And then we know our New York 1 distro data, statistical median data of the distro for the last 16 weeks is 1.5%, right? 1.15%, which puts us near that high of the day, right? So if we start breaching these levels up here around P12 high, then I'm going to assume that this is a long true. If we can't do the 4-step reversal, right, meaning getting below 9:30, we stay above 9:30, then I'm going to assume that we're going more for a true day, right? We know that the higher probability is to come up, to come down, right? Something like this, and then put a new low day towards the end of the day. But we have to account, because it is a news day, that we can go up and continue drifting up, right? Because on the daily chart, there's plenty of space in the previous day candle that we can, you know, close in, all right? So now, with that being said, right, we know that that is a scenario, and if we start seeing the live price component just drifting up and then going into a range and can't get below that 9:30 price, our job is to understand that the live price is saying it wants the lower probability of a long true versus the higher probability of a long false. So I don't have many levels other than, because we've hit them all, right, to base off of, but I am paying attention to the 9:30 specifically, right? Does 9:30 sell us into a false? And if we go false, then I'm going to assume that we're going to dig deeper into this reversal zone, and the high of the day is being put in, and our job is to continue to sell. If we cannot do that, I'm going to shoot for cash flow long. So let's draw this out and kind of start figuring out the scenario of how to engage with longs versus shorts. Right? So if 9:30, this is going to represent the 9:30 candle on the 1 minute, right? If 9:30 opens up and we start bidding off of it, I will start taking longs, covering the queen and collecting cash flow at the typical 10 basis points off the 9:30. But I'll leave runners to target this P12 high and this Globex, and then I'll take partials there, and I'll leave some runners for the high of the day situation for a long false, right? If we get below it, if we get below the 9:30, and 9:30 gives me a sell, then I'll sell, I'll cover the queen, right, for 10 basis points, and I'll target new low day, right, for that. Let me put my low day data on I completely forgot to do that for a long false, which is between 0.7, and we'll use this as an anomaly, 1.1. 0.7 and 1.1. And the only reason I'm not doing mode to median is because, right, and then we will do, I'll explain that right now. You can see that you drop off in an anomaly land. So if this was a bell-shaped curve that I was looking at, right, I can see that the mode sits on the median and that there is some skewness to the left that I have to account for, right? I can do, if you just do 0.6 to 1, you're okay, but I'm going to give myself an extra 10 basis points to account for this drop off into anomaly land, right? All right, so, and then I forgot to check the time for the long false, and then we expect low of day between 9:30 and 1600. So this isn't going to be one of those days where we just get obvious high day, low day. We're going to have to make decisions around live price because of the clustering of high day, low day data. All right, so let's go 9:30 to 1600. And then that'll pop up, and ta-da! Even for a long false, we've hit it. Right. So just because I've seen, Austin already started talking about the variance streak of the false, and we'll get into the extreme of that. Right. I've seen CPI recover the news candle and become true more times over the last 20 years than turn in false. So I am aware that this day and NFP Fridays are the 2 days that do skew more towards the long true versus the long false. So I'm aware of that. So I'm not going to marry a side. I'm not going to try it. Usually I'm trying to identify it. By 11:30, I'll know if it's going to be a green or red candle. But early in the day, I'm trying to identify if it's going to be a green or red daily candle, and am I in the body of the wick of it? Today's not going to be one of those days. Today, I'm just going to flow with the live price, shoot for my cash flowing targets, understand both scenarios that could happen, and trade off of that. Right? If we do start getting a long true scenario, I will turn Captain Backtest on, right? And that's a trend model that I have. And in this case will be to the upside, and I will use the 5 or the 10-minute time frame to confirm entry on that. But that's my war game today. Took a beautiful midnight retracement trade that is Austin's famous for, and it played out really great today. So I'm in no rush. That's what I got. Brother, it's all, my bottom line up front is all around this 9:30 and what it does between 9:30 and 9:45, and if it's going to be true versus false.
Yeah, I'm gonna be heartbroken if we just open up in the middle of P12 mid again.
That would be cool.
We have a repeat of if you look at Tuesday, that's not what I want.
Yeah, we just got the signal for candle signs. Just flip the probabilities lower for us from a 3-hour approach. From a 1 hour, it's still up. Right, candle science is still up. From a 3-hour, we just breached the previous 3-hour open, so we know it's down. So yeah.
And we closed below P12 mid too.
Yes, we did. But remember, a pre-market between 9 and 9:30 can sit here and fake you out and funk you out and all the fake outs at once. But like, we just wait for 9:30 to give us that vision.
Yep.
All right, what's your bottom line up front, Austin?
My bottom line up front, I need to upload that funny picture back, is if we open up anywhere near P12 mid, guys, I'm going to be very, very cash flow heavy because the trade is still pretty decent for either if we're going to go true, I'm going to respect this low a day distribution in time until live price tells me not to. And 9:30 breaking to the downside would be live price telling me, okay, now if we're not going to do the false in the pre-market, a break below 9:30 would tell me, okay, this is the final chance, the final countdown to do it. But I'll also be very, very cautious of what we like to call the false of the false, which is we pull back attempting to go false, but we don't actually take the low. And then we just do this little fake out. This is just such a big signature of a true day. Trues don't happen a lot, so you won't see this a lot. But when it does happen, it's just such a classic signature. So that's why I'm saying if we open somewhere near P12 mid, I'm going to be very, very cash flow heavy. And then same thing for the upside. If we break to the upside and I can define my risk, I'll be very cash flow heavy, just scaling out and then leaving just a couple. The only real difference, guys, if we open somewhere near P12 mid, a break to the upside, I will leave more contracts on for runners. A break to the downside, I will leave maybe 1 to 2 micros on for runners and cash flow heavy at the beginning here. So that's my bottom line up front. That's what I see. Other than that, today is community live trade session for the people watching that's in the pack trade group and the current boot camp members. We love to do this every single Friday where the members get to come together, call price live. Mick and I shut up. We just sit back and let the people do its thing. And we let you guys be the gurus and the furus, right? We let you guys call price. If you're in the boot camp, you're not trading yet. So call what you see. Call when live price is giving you the classification of the day. Call what you see how we're reacting off an 05 box. Are we potentially doing a 3-hour line or apex? And if so, why? What's the daily profiler telling you for the current high or 930 and where the high to low days could be? Practice calling what you see and being wrong. And then for the pack side, flip side of that is share your screen or call your trades. Practice being wrong and being confident, because that is what trading is all about. It's not about winning. It's not about every single trade you take being perfect. It's about having confidence in chaos. And if you can sit here every single day and just have a little bit of peace on the charts, that consistent execution will bleed into consistency. What's up?
I hate to say it, but like that piece on the chart comes from, you know, what we do in phase 2, like defining that position size based off of your model metrics, right? Knowing how many consecutive losses you can take in a row, right? And then just sticking to your damn rules, right? Like no decision should be made newly as you're pressing the button. Like that is not how it should be done. Like everything needs to be defined. And I'm telling you, I've played the game. Plenty of us have played the game where it's like we think we're smart enough to say, hey, I can go long here and sell here and blah, blah, blah. But in reality, like that's not how it's done. And that's not what leads to consistency, right? What leads to consistency is saying, hey, I just measured all the 930 breakouts over the last 20 years. And I can see that the average MFE off of the break is between 0.10 and 0.3. And, you know, my consecutive loss is 7 minutes in a row. And if I have a $4,500 account, and I'm risking 5% risk per trade based off that MFE data, then I know that my position size should be X, right? And then that gives you the confidence not to go into it, not to blow up, and just to actually understand where you're.
Oh, we lost Mickey. Oh, I think something happened. He had a mute.
No, I had to kiss my wife goodbye. She's going out with the girlies
today.
today.
Do that to me. What the?
And back to what I was saying, if you don't have that data, one of the things that we force you to do in the boot camp is to get to that data. Like first month, we tell you to stop trading. Like number one, we know that like your stop is probably open, your risk per trade is probably open. And we want you to do it the right way, because nobody ever does it the right way to begin with. I didn't do it the right way. Austin didn't do it the right way, but we learn from our mistakes. And so we want to make sure that you guys don't continue to set yourself in an environment where you're rushing to failure, but you're doing it slow, smooth as fast, and doing it the right way. And the work that you put in the 3 months boot camp, you will leech off of that for years to come, right? And you can just stop. You can stop searching, because you built your own trade plan and you made your own decisions and you convinced yourself to do it in a more quantitative way that you can sustain and survive max drawdowns and consecutive losses, right? So if you're interested about the boot camp, we are going to automated boot camp style the next class, but prices will not change. It's only going to get better. Join the boot camp and you can go on and get early access to start watching the videos now. But that next boot camp will start in March, I think. Yeah, March. Let me see, January, February, March. Yeah, March.
We're already halfway in, bro. It feels like we just started this class.
I know, man.
I wanted to just share you guys one final thing before we end, and it's, if you see my screen here, this is the brain the brains of the person behind this, both, and shout out to Andrew, shout out to Jerry for just collaborating together with me. He wasn't the one, Andrew was the one that built this, but Jerry was a huge impact into like my way of thinking around MFE in terms of what you're seeing on my chart. So those two guys, freaking big shout to you guys if you're watching. But what you're seeing here is, it kind of looks like a volume profile, but it's not if you're new here. It's just MFE distribution in terms of, this is, you know, like if you think about a bell curve, you know, this is your peak, you know, this is if you're flipping it sideways, right, this is your higher strike rate area. This is your median to average. Okay. So around a 50. And then this is your extended side of the bell curve. So what this is kind of, we're at a really big pivot point right now from just sheer MFE perspective, and that's just favorable price movement. So we broke the New York 1 range right here, and this MFE is the high strike rate portion. So anything under this bell curve here, this is the higher occurring favorable price movement when we get outside of New York 1. So we are at a big pivot point right here where either, and this is why I love viewing data like this, because think about this contextually. What is the causation? Not what just looks good. What is the actual context behind why the MFE is distributed this way? Well, think about this. If we go false more than we go true, these are more often than not your consistent MFE, no matter if we go long or true or false. This is your just consistent price movement. Then this is your decision point. Are we going to make this consistent movement, then start heading to the downside to hit here? Or is this the area where we come back to and get above? And what are we doing? We're contributing to the other side of the bell curve, where the live price is doing what historically in the past 70 days has gave this other side of MFE. And so I just find this so interesting, because you can like a heat map. That's why I love heat maps so much, is you can see price within a heat map of favorable price movement. And then on the flip side, if we do go false, okay, going back to the normal chart here, if we do go false and take this low of day and do what we typically do, well, then guess what we have on the other side? We have on the other side, here is your MFE, your high strike rate MFE of where we most likely are going to reject and then come down. And then this is where we're going to create the MFE of the other side. All right. So it's just so cool. But yeah, that's all I want to end with.
Okay.
Shout
I got to
out.
answer this one question in the chat. What does an automated boot camp look like? So right now I kind of went into drill sergeant mode, like, because I left the Army, went to investment banking, and then started this off, right? So right now, like, the boot camp is 5:30 in the morning EST classes, and then we do a 12 o'clock, focused learning session, and then we do a 1600 re-engineering session every day, and it goes for 3 months, and we just hold your hand and force you to do the right steps of being a consistent, profitable trader, like, and then we obviously live trade every day in the pack side too. And every Monday for free for you guys, so you can practice what we preach daily, right? But the biggest issue I had is, like, we're starting to become global, right? Like, we have people in Germany, we have a lot of people in Singapore, we have a lot of people on the West Coast, and like the time shift of the class is out of sync with that aspect. In my mind, I thought everybody I would ever attract would come from the East side. Well, that's not to be true, right? So what we're doing is we're making the boot camp automated, the classes automated, so you can join at any time you want, and it's going to be self-paced. It's still going to be only $100 for 3 months, right? You're going to get access to the journaling system, the daily profile, database, the candle science database, all the indicators. But then now you're going to be able to do the classes at self-pace, right? So you're not going to have me whipping the crack, forcing you to do it fast, so we can get to phase 3 and start building trade plans. It's going to be more of a self-paced, anytime you want to do it kind of thing. And what that's going to look like is you're going to get your bottom line up front video where it's like to the point, like 5 to 10 minutes long, right? Then you're going to get open, high, low, close data thrown at you, right? Like we've coded our own trading charting platform to quiz you in a live environment, a sim environment, to be able to identify what we taught you in the bottom line up front. Then with that subject, you're going to get the deeper learning and the nuances of the learning, right? And then you're going to move to the next one, and you're going to take your final quiz and move to the next topic, right? So like we've tried to make it to the point where you use all your senses, all your brain to be able to learn and get the aha moments of what we're teaching you and the probabilities. And because it's hard, like I get it. Like everybody starts in the trading space, and me and Austin say it all the time. For some reason, like when you become a trader, you lose all sense of reality of business and common sense and decision making. And we're trying to bring that in the value of your dollar. And so we're trying to set an environment where you think within probabilities, not this pattern showed up, right? This guy that I follow said, whenever this pattern shows up, this is where my stop in TP goes. But for you to be able to prove it to yourself. And so that automated boot camp will look like that. And now the 1600 re-engineering sessions will still happen. The focus sessions will still happen. It's just when you take the class and what level you are is going to be different. Oh, 1500. Yes. 1500. 1500. I ain't never going back to that 1600. But yeah, that's what it looks like. And, you know, it's going to help you as your experience as the client, you know.
I think the funniest part about you explaining this was two different people at the same time almost, Carl and Equilibrium, both said, will the boot camp still call me an F-tard?
Absolutely. Absolutely. We're coding that into every chart.
All right, ladies and gentlemen, it is 9:27. Market's about to open. If you are in the pack trade group in the boot camp, I am pinging you right this very second. Community live trade session is now open. Hope you guys have a wonderful, wonderful rest of your day. Do not give yourselves poopy diapers on a Friday. Stay grinding on your goals, and never let anyone tell you that you can't do something they've never done themselves. I'll see you later. Bye, everybody.
They say the world's a scary place. They say that I should stay in line. But who are they? What do they know? I don't believe a word they say. I don't know. Don't tell me I can do it if you ain't ever done it yourself. Don't tell me that I'm losing. You don't know what it's like in hell. I told you not to do it, but you went and did it yourself. Don't tell me I can do it if you ain't ever done it yourself. Don't tell me I can